All right, let's dive into MGM Resorts' latest earnings report. And wow, while the headline numbers looked like a massive jackpot, the real story here is actually a tale of two very different gambles. One happening right in Las Vegas, and another one playing out all across the globe.
So, just a few days ago, MGM dropped its latest financial results, and it definitely got Wall Street's attention. I mean, the numbers weren't just good, they were an absolute blowout.
Just take a look at this. Revenue came in at $4.61 billion, easily cruising past the $4.42 billion everyone was expecting. But the real shocker? That's the bottom line. Earnings per share. Analysts were predicting 64 cents. MGM came in and delivered $1.60. That is not just a beat, that's a statement.
Yeah, to put that into perspective, they didn't just squeak by expectations. They absolutely crushed them, earning almost a full dollar more per share than anyone predicted. It's a huge number, but believe it or not, that isn't even the most interesting part of this story.
See, the real story here is that this massive success actually hides a much more complex picture. It's all about diversification, where some parts of the business are kind of struggling, while others are just completely soaring. So let's break it all down.
First up, let's talk about MGM's historic home turf, Las Vegas. Now, with an earnings report this good, you'd think Vegas would be absolutely booming, right? Well, the numbers tell a little bit of a different story.
Okay, before we get to the key number, just a real quick definition. You're going to hear the term EBITDA a lot. All you really need to know is that it's a great way to measure the core profitability of a business. It strips out all the fancy accounting and financing stuff. Think of it as the pure operational horsepower.
So here's the twist. For all of MGM's incredible success, the core profit, that EBITDA, from its Las Vegas Strip resorts was actually down 4% in the fourth quarter. So if Vegas is down, where in the world is all this growth coming from?
You know, the story in Vegas is really a tale of two different customers. The company is seeing a bit of a slowdown from its more budget-conscious travelers. But on the flip side, its luxury properties, we're talking about places like the Bellagio and the Aria, they're thriving. Profits there actually grew 7% for the year. So the high end is hot, but the broader market is cooling off.
All right, so now let's look at where that growth is coming from. This is where MGM's other big bets are really starting to pay off. Two massive growth engines are more than making up for any softness in Vegas, their operations over in China and their digital betting platform.
And this slide just lays it all out, doesn't it? While Las Vegas EBITDA was down 4%, MGM China's was up a staggering 31%. This right here is global diversification in action. One market just completely making up for another. And it wasn't just a fluke quarter either. MGM China set a new record for profits. They grabbed over 16% of the entire Macau market, and they even renegotiated their branding deal to bring in an extra $50 million a year in pure cash flow. It has become an absolute powerhouse. The second growth engine is BetMGM, the company's online sports betting and gaming business. You know, just a year ago, this part of the company was losing a lot of money. Now, it is a completely different story. I mean, just check out this turnaround. In 2025, BetMGM swung its performance around by nearly $470 million to become profitable, and they are not stopping there. They're guiding for even more profit this year and are targeting a whopping $500 million in annual EBITDA by 2027. It's gone from a cash burn to a cash machine. And who better to sum it all up than the CEO himself, Bill Hornbuckle? During the earnings call, he put it so plainly: diversification is clearly working. It really is the core of their entire strategy. So with all this cash flowing in from all these different places, what's MGM doing with it? Well, they're placing their next round of big bets on the future. As you can see, the company's cash flow isn't just about Las Vegas anymore, not by a long shot. They now have 4 strong, reliable streams of cash coming in: their Vegas and regional properties, plus the growing firepower from MGM China and BetMGM. And here's what they're doing with all that cash. They're returning money to shareholders by buying back stock, they're reinvesting in their current properties to keep them top-notch, and, most importantly, they're funding some massive new developments. This timeline gives you a great sense of their long-term vision. They've already broken ground on a mega resort in Osaka, Japan, a huge new market for them, which is set to open in 2030. And even before that, they're expanding into the Middle East, with new MGM-branded hotels opening in Dubai in 2028. They are literally building the next generation of growth right now.
Okay, let's pull all of this together. After this deep dive into MGM's report, what are the key things you should really take away?
First, diversification is king. It's not just a buzzword. For MGM, it's a proven strategy that is clearly working. Second, Las Vegas is shifting to luxury. The high end is where the action is. Third, the new powerhouses are China and digital, and they're fueling the company's growth like never before. And finally, MGM is smartly investing its winnings, using today's profits to fund tomorrow's empire.
So MGM's big global gamble is clearly hitting the jackpot. But it does leave us with one big question. As the U.S. consumer maybe starts to tighten their belt, can the explosive growth that we're seeing in China and the digital world continue to carry the whole company forward? Well, that's the billion-dollar question, isn't it?